that my friend Harry Dent, he's always saying buy treasury bills. But I'm concerned, if what I think is about to happen is going to happen, which is the demise of the U.S. dollar, the hegemony of it and its power and its reserve status. If the U.S. dollar goes bad and fiat currencies go bad, what happens to bonds? And the question is, how safe are bonds? Because I have a friend, he has not a million, he has hundreds of millions in bonds. And yesterday I went and bought some more silver and hid them in my secret mountain vault. But he says, he won't touch silver. He says, U.S. treasuries are it. So with that question, when he's got hundreds of millions stashed in U.S. treasuries, he sounded like Harry Dent. So to clarify all this, we brought on Adam Taggart, and he and his former partner, Chris Martinson, they talked about not the dollar milkshake theory, which was Brent Johnson, but they talked about the eyedropper of water and a football stadium, because I think that the last eyedrop is about to hit, because that football stadium's almost filled up.
And for folks that don't know the eyedrop and stadium reference, this is really about the power of exponential growth. So imagine somebody takes a magic eyedropper and walks down to the pitcher's mound and squeezes out a single drop of water right there on the pitcher's mound. And that drop of water doubles in volume every minute. So minute 1, it's 1 drop in size. Minute 2, it's 2 drops in size. Minute 3, it's 4 drops in size. Minute 4, it's 8 drops in size, right? So the question is if you got handcuffed to the topmost bleacher seat in the stadium, how long would you have to escape your handcuffs before the stadium was underwater? And, most people will say, I don't know, a year, months. The answer is very surprising. The answer is 45 minutes, much less time than you think.
A lot of times in America can't see because we're a goldfish bowl. Everybody looks in, but we don't see out. I'm looking at what happened in Sri Lanka, what's happening in Brazil, what's happening in England, what's going to happen in Germany but we can't see it as Americans. And
I think the goldfish bowl is a great analogy too, because goldfish really have incredibly short-term memories. We just so do we.
So do we.
So I'm sitting here watching all this, and so that's why I keep thinking of the eyedrop theory. So when pitcher's mound is covered and I'm sitting in the top bleacher, how much time have I got? And I don't know if you had the chance to call him, as Andy Scheckman. He was Miles Franklin. He's one of the most accurate goal guy I've ever. His macro of the world is precise. But he was talking about in 2019, when Biden abandoned Afghanistan, the next day, Saudi Arabia went to talk to China and Russia. And this is 2019, and just a couple of days ago, Saudi Arabia switched from the petrodollar to shifting to a gold-backed yuan. And nobody even notices that. So Saudi Arabia joined forces with Russia, China, Brazil, India, South Africa.
And I think, too, some people don't understand when Kissinger cut the deal with Saudi Arabia and said, the petrodollar, said, we will protect you militarily, and in exchange, you're going to sell your oil in U.S. dollars, which has propped up the U.S. dollar. And now when we pulled out of Afghanistan, Saudi Arabia goes, maybe I can't trust you to protect us because you didn't protect them.
Well, that and when Russia invaded Ukraine, basically the U.S. weaponized the financial system against Russia.
Right.
And a lot of other countries looked at that, basically seizing Russia's assets that were held abroad and whatnot. And a lot of countries looked at that and said, whoa, I'm in the U.S.'s good graces right now, but I might not always be.
Exactly.
And if they could do that to me. So, what we've done in the response to the war in Ukraine, whatever you think about it, we have basically provided a pretty strong incentive for many countries to accelerate their plans to de-dollarize. And that's exactly what you're just talking about with the steps that Saudi Arabia took there. And I have not talked to Andy yet, though I appreciate you putting us in contact, Robert. So I can't talk really authoritatively about that last statement about them switching to some sort of potentially gold-backed yuan thing. But I certainly have heard a lot of commentary recently about the BRICS countries working on a commodity-backed currency to rival the dollar and probably going to be priced in gold grams and whatnot. We can debate.
Wait. There's two more things that happened. You had the Nord Stream pipeline was bombed.
Yep.
I mean, was that an accident? Did it just happen to blow up? And the other thing that happened, the reason you're on today is because when who's the new prime or the future ex-prime minister of England what did she try and do?
Liz Truss, who's already out. Yeah.
Yeah. She's gone. The shortest term prime minister in history, but because she raised interest rates, whatever she did, she tried to cut and all this stuff, the whole bond market nearly came apart, their pensions came apart, and then they had to bring a new prime minister in already. So all of this is happening, and Americans are wondering, well, who's going to win the midterm?
Well, that is important. Midterms are important.
Great point, which is kind of back to our stadium, like where are we on the big picture of where things are headed? We are beginning to see, as things, as you go along an exponential curve, things happen faster and faster, right? And so we're beginning to see more of these really big things that we just really couldn't have ever expected would happen, right? The Saudis are maybe, beginning to reject the petrodollar. England's bond market almost blew up. And to your point, Robert, somebody just sabotaged the Nord Stream pipeline. I don't think I don't think anybody debates that this was an act of sabotage. Now you can talk, a lot of people are pointing fingers in different directions. We're seeing more of these things that nobody could have seen coming, more of these sort of black swans. And of course, the more they are and the faster they happen, the more the odds of something really systemic breaking and something really bad happening obviously increases.
But a big part here is they want to destroy hegemony of the U.S. dollar, which came in place in 1944 with Bretton Woods. The dollar became the gold standard of the world, or the reserve currency of the world. And then 1971, Nixon took us off the gold standard, and we went from being a capitalist state to a credit state. So everything is floating on debt right now. Bonds are debt also. And so when Harry Dent is yelling about, you should buy U.S. Treasuries, I said, but I think they're going to torpedo the U.S. Treasury. And that's how we called you, Adam, is because what the hell is a bond? You know what I mean? How safe is it? How safe? That was 2019. The repo market blew up again. The last time that blew up was 2008. And the reason the repo market is important is like repossession. Do you know how valuable is the asset that you think is an asset? Are they going to come and repo your dollar, or would they rather repo your refrigerator? Do you know what I mean? What has more value today? In 2019, that's what blew up also again. How valuable is a bond?
If you are borrowing from the U.S. Treasury, that is considered, and we can debate this in a minute, but that's considered to be basically about the safest type of debt that you can take on. And one of the reasons why it's so safe is, first, the U.S. is the biggest, most stable player out there on a relative basis, but also we have a printing press. So if we really get in trouble, the Federal Reserve can basically print up the money to give to the Treasury to make sure that they pay you back. So, you are going to get paid back at least nominally, meaning if I give you $100, it's a high likelihood you're going to give me $100 back. Now, if they had to print those $100 to pay me back, then maybe those $100 are devalued a bit by inflation. But again, borrowing from the U.S. Treasury, relative basis, pretty darn safe.
If you had $1,000, where would you put that money? Would you put it in bonds? Would you trust it to the government? There's corporate bonds, there's private bonds, there's so many different types of bonds, muni bonds. And this whole program started because my best friend, who just sold his business for $2 billion and walked away with a lot of cash in his pocket, he's 100% in bonds. I'm going, but what happens if the dollar goes bad? No, it'll be here forever. Harry Dent swears by U.S. bonds. And I like gold and silver and Bitcoin. So this is where do you put your money, but what is the bond market signaling?
Right. So let me get to the cut to the chase of what I believe your question is, which is how much time do we have, right? And it really depends on where you are in the story, right? So some players have a lot less time than others. Sort of like other countries are going to fail first before we do. Other countries, other currencies are going to fail first before we do. Yeah. So, if you're looking at let's look at currencies. Right now, the other world major currencies are having a much worse time than the US dollar is, right? The Japanese yen is basically in free fall right now. I think it's lost definitely more than 40% of its value over the past year, maybe even more right now. The euro has gotten down to parity, below parity even with the dollar. The pound has almost gotten to parity. It hasn't been there for decades. So we're already seeing other players stumble harder and faster before us. And you had talked about the dollar milkshake theory that Brent Johnson mentioned. And I'll try to keep it really simple for folks.
Good.
What it basically says is that as the rest of the world stumbles, and they are more likely to stumble
first
before we do, and probably worse than we do, that creates a global demand for dollars.
Right.
And that props up the value of the US dollar. And that's exactly what we've been seeing this year. I just told you how much it's appreciated versus all the other major fiat currencies.
So one second. And so that's why gold and silver come down, because the dollar keeps getting strong in dollars. I mean, in US dollars.
Yes. And what's so interesting about that is...
But in yen, gold and silver are going up compared to yen.
I was going to say, if you own any other currency besides dollars, your gold has appreciated dramatically in your local currency. Right. It's only in the US that it hasn't. And that's because the dollar has been so strong this year. And that's because of the dollar milkshake theory. So I emphasize that because there's a lot of people who ask a lot of the same questions you were asking, Robert, which is, well, all right, so I heard this thing about Saudi Arabia and we've got all this debt. And so is the US dollar just going to become toilet paper overnight? Basically, the dollar milkshake theory says, look, like it or not, and Brent Johnson is not a fan of the US dollar. He thinks there's a lot of problems with it, but he just says it is the cleanest shirt in the dirty shirt laundry hamper. And we have a lot of advantages still, some of them fair, some of them unfair, that are likely going to prop the dollar up for an awful lot longer than most people imagine. He says at some point in time, yes, there will be a reckoning with the US dollar, like there will be a reckoning with all fiat currencies, but it is highly likely to be the last domino to fall. And another part of the dollar milkshake series says, in addition to propping up the value of the dollar because there's this global demand for dollars, a lot of foreign capital is going to just find its way into the US market anyways, because it's going to be seeking stability, safe haven, and return. And so that's something that, as bad as what might be coming is, the US capital markets may actually fare pretty well on a relative basis because you just have this flood of outside capital coming in. Again, not necessarily very fair. And for those who have legitimate concerns about the US market and the US dollar and the US capital markets, it doesn't negate them, but it basically says in the relatively near to midterm, we may actually be the source of strength.
I have a question. You say as long as the U.S. dollar is in high demand, what would cause that demand to slow?
It's a great question. So obviously, a really big one would be, if there was a competing currency on the global scale, something that could either remove the U.S.'s reserve currency status, or at least give a credible alternative that diminished demand for it.
Can I add one more thing?
Yeah.
You have dollar milkshake there, the eyedrop thing, but if your eyedropper is filled with yen or pesos or euro, it's going to come faster than the dollar, US dollar, I'm saying.
Well, absolutely. And that's why you have to worry if you live in those countries.
Right.
So like if you live in Japan, you have to be preparing for now. How much time do you have left? You've got an awful lot less time than the folks sitting in a stadium inside the US.